Palantir is currently falling faster than my motivation on a Monday morning. This is after the US defense sector is having cutbacks of 8%, and Palantir CEO Alex Karp is saying he's selling shares of $1 billion. So obviously this stock now has a lot of short momentum behind it. But is it still a good time to be buying into this stock? Well, I'm going to be giving you my analysis in this video. I have previously done videos on Palantir and they haven't been the best outlooks. But in this video, I'm going to be giving you my honest opinion and review based off of a few formulas in which I can show you. Before we do get into this video, I would like to state that just because my formulas are saying this stock looks massively overvalued does not mean that this stock isn't deserving of its valuation. Of course, this stock is trading at a stupid, I think it's like 400 PE ratio currently, which is kind of outrageous, and I have been both bullish and bearish on Palantir in the past, and now I have a well-rounded opinion on what you should do with this stock. But looking here on my system, we can see Palantir is at the score of 99. When I can find it, here it is. It is at a score of 99 and it gives out a overall rating of -7.29 on a breakout indicator, with it being positive of the moving average difference on the 50-day basis. But that doesn't really mean anything because this stock has been massively pumped up, I would say artificially recently, and now it has dropped back down to a more sustainable level, but in my mind it's still not that sustainable. But it is not all bad news, of course, for Palantir, as they have now ended their 5-day losing streak on Wednesday following the earlier pressure stemming from US Defense Secretary Pete Hegseth announced a planned 8% reduction in US military spending over the next 5 years, which of course, that alongside Alex Karp selling his shares has just sent this stock into a falling frenzy, as this stock just seems to have the momentum of an old lady falling down the stairs at the moment. This doesn't seem to be looking as if it is going to get reversed anytime soon. And on the MACD indicator, we can see here that we barely, just narrowly, in fact, no, I'm lying. We entered into a short position here and we narrowly avoided going back into a long position on the 27th. This is actually on a 30-minute indicator. If we look on a day chart, we can see that we are still actually well into a long position, so this could definitely be the beginning of the end, or it could just be the beginning of a really good time to buy in. It depends on how you view this stock, but intrinsically for me, as we will get onto later on in this video, I have this stock to be massively overvalued at the moment. And I think with defense spending decreasing alongside Alex Karp selling $1 billion worth of shares, that to me signals that people are starting to see the hype being over with this stock, and it's essentially a really good time to take a profit, especially if you're selling $1 billion worth. I know people are saying, well, it's $1 billion, that's actually not that much for how much he has, but at the end of the day, that's still $1 billion that's going to be taken out of this stock. Of course, with a market cap of $198 billion, it doesn't seem to be that much, but you've still got to think that is still $1 billion being taken out of the stock. Of course, it's going to have an impact when it is taken out. I would just like to say, don't get me wrong, I am very long-term bullish on Palantir, and if you are holding it for the long run, say you want to hold it for 2 to 3 to 4 to 5 to 10 years, then you're going to be absolutely fine with this stock. I think this stock has got a lot of room to grow, but of course, looking at the intrinsic formulas for right now and the discounted free cash flow analysis, we can see that the stock seems to be overvalued. And so getting onto my analysis now, where I can actually back up what I've been saying, we can see here a liquidity ratio, which is incredible. They have a liquidity ratio of 29.9 in the last quarter, which contradicts exactly everything I've said, because that is really, really positive. That means for every dollar of debt in which they owe, they have at least $21.9 of liquid cash to pay this back in. As in the world of business, cash is quite literally king. You want to be paying down your debt in liquid cash. You can't really be selling your assets. So if we now look to the retention rate, we can see here that this is also pretty good, with the exception of the most recent quarter only being a 9.5% retention rate, but previously before that they were nearing the 20% retention rate, which is incredible. I think this can be attributed to a lot of R&D in the last quarter, and when we look to the free cash flow analysis, this backs this up, as in free cash flow we can see this is increasing, but it hadn't increased at the same increment as it did from the operating cash flow from the previous quarter. So we can see that they are spending a bit more on R&D, paying out debt with their free cash flow, which is probably unlikely as they have a really good liquidity ratio, or stock buybacks, essentially, meaning that this company is looking very, very strong on their earnings reports. So now we're looking at the 365-day exponential chart. I would like to shout out the guy that told me I was saying exponential. I didn't realize I was doing that, so sorry to all of you that I may have offended in the doing so. But now we're looking here, and we can see that we are now bang on this exponential chart trend line, and we can see obviously this price has just taken a massive fall, faster than my Wi-Fi in a important Zoom call. And if we look on the volume, we can see that this is basically following suit. However, we're not actually seeing the sell-off increasing with this volume, which is interesting. It could suggest that there could be a lot of backing behind this stock, essentially, meaning that we could expect to see this get bought back up relatively quickly, but that could just be a false indication. Again, I don't want to just give you my point of view. I want to be very unbiased with this. And if we look on the 91-day exponential chart, we can see it is the exact same story. So what's the quick figures for this stock? Well, they got a PE ratio of 448, a 52-week high of 125 and a low of 20, this being a difference of 105, and they have a current beta rate of 2.79, which means this stock is very volatile. And the current price is set at $84.77. And if we look here to see the growth values, we can see the earnings per share is currently set at 0.19, and the growth rate is set off of a basis of 25.53%, which is what the analysts are recommending on Yahoo Finance. And when we compare this with the mean surprise rate over the last 4 quarters, we get a growth rate of 28.62% year over year. So what can we see for the intrinsic value? Well, this is where the stock seems to be stuck in the shit. Essentially, on the leftmost bullish formula here, we can see the intrinsic value is only set at $11.45. And on the right, we can see the bearish formula actually sets this at $6.20, which is just incredibly I would say harsh, but these formulas have never failed me in the past, and these are very accurate formulas. So it just looks to be the stock is massively overhyped at the moment, and on the mean here we can see this is set at 8.82. If we do add a margin of safety onto this, which is something that you probably don't care about because it's already bad enough, of 25%, this gives you an acceptable buy price here on the left of 8.5, on the right of 4.6, and on the mean being at 6.6. Furthermore, we can see here on Peter Lynch's valuation that they get a result of 0.06, which is absolutely crazy. I've never seen a result this low, so it essentially tells us that this stock is hugely overvalued. Don't get me wrong, this is of course a very bearish formula as it is, but I can't justify bumping that up to a fairly valued at this point. That's kind of ridiculous. Before I get onto the discounted free cash flow analysis, I do just really quickly want to say this isn't where the stock should be at the market price at the moment. You might be thinking, oh my god, this is stupid. This is just what their financials tell us of the valuation of the share. So from what the company brings in monetarily, this is how much the stock should be priced at. But of course, that doesn't account for news coming out in favor of this stock or future. Well, of course, it does take into account future growth, but doesn't take into account future unexpected growth. But in my opinion, no amount of unexpected growth can really justify this price. On the discounted free cash flow analysis here, we can see that with a discount rate of 8.32 and the rest of the figures here, we can see we get a discounted price per share on a 9-year basis of $83. Which is exactly where around we are now, but of course we are not in 9 years time, we are 9 years in the past, and we can see that therefore this stock is massively overvalued. On a 3-year growth, we can expect this stock to be valued at $27.54. So there is nothing I can really say that will convince me, let alone maybe you, that this stock is currently fairly or undervalued. It's definitely not undervalued. It's kind of difficult. I feel like this stock has just been a hype train and it's just had a lot of momentum behind it. Of course, with it being in the defense sector, and the current state of the geopolitical world right now, we can see that people are obviously pricing in a lot of money into the stock, much like they did with Lockheed Martin and the like of that in the past. But I don't think it's massively justified, and with peace negotiations potentially happening between Russia and Ukraine, we can see that maybe there might not be as much of a need for Palantir. But of course, you never know, with Trump basically saying he wants to take over Gaza. Maybe there will be a need. You never know. So what do the analysts recommend for Palantir? Well, they are currently rating this at a hold with 14, putting it at a hold, 3 at a strong buy, 1 at a buy, 2 at a sell, 4 at a strong sell. I personally agree with hold. Again, just because the intrinsic value says that the stock is worth X amount doesn't mean that that's where it should be. It's just a good target for the price to be set at. It's mostly used for stocks in which are below the intrinsic value. Say, for example, Celsius, a few weeks back, I said it will go to $32 because that's where I had the intrinsic value set, and it went exactly there. So it's just a good basis to go off, but when it's so low down, I can't say buy. I could maybe say hold, but I think personally I'm going to be putting it a hold slash sell. It really depends at the moment because obviously the momentum is in the short positions favor, so it will just be a time will tell sort of thing if this stock can gain traction back on the projection over a 90-day course. Of course, we're seeing a lot of volatility projected here, with us expecting it to go down to the $26 mark or the $8 mark and then climbing back up, which I think is quite, I mean, that's exactly what my system actually says, but I don't think that will happen. I'll be realistic with you. Personally, what I think will happen is we will continue to see this fall to around the $65 mark, but then we are going to see a bit of buying pressure, and then we're going to see a bit of head and shoulders, and then I think that might be the end for Palantir. It all depends on geopolitics and the current state of the world with this stock, as it is a very, it is a defense-based company, of course. And so for that reason down here, we can see Palantir. Now I've revised it finally, and I am actually putting this at a hold. I know that you might be thinking, well, your intrinsic value saying blah, 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 but I think we're going to see a lot of downwards momentum for a bit. It could be a good time to buy a bit more because I do think we're going to see a second spike for this stock, but I don't see this being a good stock to be holding for this current year. Unless you're a guy that likes a bit of volatility, but for me, I don't really fancy it, especially when the volatility is in the negative direction, as when you try and catch a falling knife, you lose your money and your fingers. But only time will truly tell what will happen with this stock. If you are a keen holder of Palantir, then please let me know what you are doing with this stock. Are you holding it? Are you buying more on this dip? Or are you currently shitting yourself because it's finally going down after 9 months? I mean, you could have had a child in between the amount of time that it's taken this stock to finally fall. It's ridiculous, the amount of momentum this stock has had behind it. It is truly impressive. So if you have enjoyed this video and found it somewhat useful, then please do let me know in the comments below. It would be greatly appreciated to hear your thoughts on Palantir. I'm sure it's going to be a mixed argument. There's going to be a few of you saying it's going to the moon. There's going to be a few of you saying it's a scam. It's not a scam, but it's definitely overvalued, in my opinion. But that's just my opinion. You should always do your own research before buying into a stock, as when you do, your capital is at risk, and if you're buying it right now, you're probably losing money. So with that being said, I hope you have enjoyed this video, and I will see you for the next one.